And you already know what time it is. It's Thursday at 8 p.m. Eastern. I am Tony Jackson. I am your host. I am your real money coach. And I am super excited about being here. I know I tell y'all that every week. And really, Thursday, I get up in the morning on Thursday, y'all, and I'm like, man, this is my day. This is my day. Usually it's full of meeting with some great people. And really, I met some great people today, had some great appointments with some people that some of you'll see on the show later because they're really quite experts in their different fields and that type of thing. But tonight, listen, I'm really excited about Tanika Burris being with us tonight. I have been wanting to get her on the show for a long time. So listen, we're going to be really blessed tonight. We're getting some information, learning more about the mortgage business. But I want you to put in the chat box right now where you are watching from, what part of the country, what city, maybe what part of the world. You might be in Africa, you might be in Australia. We have people from all over. We got Dr. Bonita Harris is in here. Listen, I was thinking about you today, Dr. Bonita Harris. I was thinking about you and Miss Ruth. And I was like, man, I haven't seen my girl Bonita in a while. Come on, Bonita. So I'm glad you're here. Dr. Harris, we want to give you your due, right? Dr. Harris, you earned that PhD. Listen, we got Miss Kimmett. I hope I'm saying that right, from Connecticut. Listen, we are glad to have you here tonight, joining us all the way from Connecticut. Listen, this topic we're going to talk about tonight, again, it is so important. We're glad that you're here too, Dr. Harris. Listen, it's so important because there's a lot going on in this real estate market. There's a lot going on with mortgages. We're going to unpack that stuff. We're going to unpack a lot of it. And I think we have someone that's joining us tonight that is an expert. Listen, Ruth Bell is in the house. Miss Ruth Bell, listen, it's just good to have both of you here tonight. We missed you too. Alice Martin, I'm glad to have you here. Listen, both Alice Martin and Bonita Harris and Ruth, I was just thinking about it's two churches that I've been watching on Sunday, and that's been Mount Carmel Baptist Church. I want to give a shout out to Pastor Casey Kimbrough. So I watch our live stream, and then I jump over and I watch the part where Dr. Harris goes and Ruth Bell, and so I've been watching Bishop Alexander, and so man, what a word. And then I can always depend on my man, Chad Lawson, my Go Blue. I got my hat right here, Chad. Listen, I got it right here, man. I got my Go Blue hat on, sitting right here on my desk. And so we appreciate you being with us each and every week. So last week, our co-host was tied up. As you guys know, Marlon's been, activities with his kids and what have you. But I've just been really, really blessed. I think you all have been blessed as well to have this wonderful, wonderful friend of mine, lifelong friend. We've been friends longer than, we've been adults, I guess, right? So we've been friends ever since we were 18 years old. I'm not going to tell you how old I am, but I might tell you how old she is, depending on how nice she is when she comes on the screen to me. But without any further ado, let's welcome Miss Michelle Mitchell, my awesome co-host.
Hello, hello.
There we go. Hey, Michelle, how you doing?
I'm good. How are you, Tony?
I'm doing good.
Doing good.
I never noticed this before. Just this moment, I see this sign above your head, and it says, "Do what you love."
Absolutely.
I don't know how have I missed that all this time? And I know it's been there, right?
It's not been there. No, it's not new. No.
So tell me why you got that sign up about do what you love.
Because I believe you should only do the things that you love. Like your job should bring you joy. You should love it. You should love it to the point where you would do it without being paid. So do what you love. Yeah.
I hear you. Hear you. Listen, it makes me think about, because my mom is here. My mom on my wife's side of the family, right? It's not mother-in-law, it's mother-in-love, right?
Right.
And she's here, and she loves home and garden.
Mm-hmm.
And I think about this show that I used to see on Home and Garden called Love It or Leave It,
Love it
right?
or list it.
Love it or list it, right?
Right.
Okay, all right.
Yeah.
So I said love it or leave it, right? I'm thinking about your job thing, right? I'm like,
Right.
either love your job or leave your job. Find
Right.
something out that
Right.
you enjoy. Hello, Adele Ryan. Good to have you here. Faithful person, Adele Ryan for sure. But I like love it or leave it, right?
Right.
So, because one of the things I think as we become and we get older, we realize that life is short.
Yes.
And life is really too short to get up every morning,
Mm-hmm.
and they said, Monday mornings are the number one time frame that people have heart attacks. Because you get up on Monday
Wow.
morning, you come off the weekend. What do?
Yeah.
So Friday, you get off work, you're happy,
Yep.
everything. Eagle flies on Friday. That was B.B. King's song,
Mhm.
right? Eagle flies on Friday, and then Saturday I go out to play. Sunday I go to church, and then on Monday I sing the blues. That was kind of one of his song lyrics, right?
Yeah.
And so to get up every Monday morning and go do a job that you don't enjoy,
Mm-hmm.
that to me just seems like, and not the way I want to live.
No, it's a wasted life, kind of.
It's a wasted life.
Because you're spending 40 to 60 hours a week doing something that you dread. Like, I think things should bring you joy.
Absolutely.
So, yeah.
Absolutely. Listen, we got Christy Burton from Mississippi. And I love the state of Mississippi. Let me tell you why I love the state of Mississippi. Because my mama was born in Mississippi and my daddy was born in Mississippi. And so I like Mississippi. You're right. So to spend our whole life, 40 years or whatever you happen to be working, doing something that you don't enjoy.
Right.
And so, well, Michelle, I know before we bring our guests, I know you have a conference coming up, or you want to tell us a little bit about what you got going?
Yeah, I have a workshop I'm doing next week on Wednesday, and it's for women entrepreneurs. And we are going to be talking about work-life balance and how not setting boundaries with your clients may allow you to have chaos in your life. And how do you do that strategically so that you are living the life that you want to live with joy and you're doing the thing that you love? So we're going to unpack that, and I'm going to give you some strategies that have worked for me, and how not to have our clients, run our lives because we started our businesses for freedom, but yet we don't have any. So,
and that's so important because we said, well, I want financial freedom. I want time freedom.
Mm-hmm.
I'm tired of trading money for time.
Yes.
And yet then we go out and we get this job and we start trading more money
right.
for more time, right?
Yes.
And so instead of the job owning us, we own a job.
Right.
And really true entrepreneurship is having systems in place
yes.
where it's working for you. You're working smarter, not harder.
Right.
So,
so it's a mindset shift from employee to entrepreneur to business owner to CEO. So it is a process, so.
Well, I think that's awesome. I do have an issue that it's only for the ladies, but I understand. So
because we got a lot on our plates. So
there's no doubt about that. I would agree with you 100% that there is that ladies have a lot because you're balancing. Well, you said that balancing work and home. You might have kids, and you may even qualify your husband in that group of kids. But but you have a lot that you balance.
Yes. Mm-hmm.
And then there's many of us around our age. We kind of find ourselves in that sandwich generation too.
Yes.
They call it, right? Mm-hmm. Sandwich generation where we got elderly parents and we got young adults as our children.
Yeah.
And we kind of find ourselves right in between there.
Yeah.
I was talking to someone the other day. It's like, I don't call my situation sandwich because some people got meat on their sandwich. Ain't no meat in my sandwich. I like, well, you got to get some meat on your sandwich.
Right,
you can be the sandwich generation, but you got to get some meat on it.
Right.
So
Yeah.
So I just encourage everyone to register for the workshop. You ladies out there, tell us again, what time is the workshop?
It's at noon on July 21st, next Wednesday,
Next
noon
Wednesday.
Eastern. Yeah, it's going to only be about an hour. I will take questions. It is free. So just sign up because it's
Hold up. It's free, y'all.
It's free.
It's free. It's free. Brought to you by the Real Money Coach. I'm just playing. It's free. It's free. So do make sure you go and be a part of the workshop.
Yes.
One of the things I want to talk about right now, Michelle, I don't know. Someone mentioned this to me today, and I went back and looked. About 7 days ago, Wells Fargo Bank announced that they were no longer doing personal loans. Did you hear that?
I did hear that. I don't know if it was personal loans or lines of credit.
Personal lines of credit.
Personal lines of credit.
Yeah. And the person I was talking to, he said, it says personal line of credit. That's not secured loans. That's just the open lines of credit. But it's interesting that they have decided to do that for their customers, or I guess not do that for their customers.
Right.
And so I think that's going to be kind of interesting. And I thought it was really kind of a great thing to read and think about as we bring in today someone who's in the loan mortgage lending business.
Right.
What kind of things that she's seeing and that type of thing. So
yeah, it's going to be an interesting conversation.
Yeah, and the other thing is, what impact does this have on businesses?
Right.
What impact does this have on business lending and those type of things that and I wonder, because really a lot of the loans like PPP, and I think there's a couple other disaster loans and those type of things were really lines of credit.
Yes, they are.
They're really lines of credit because there was no. I think with the one loan, one of those loans, yes, that if only if you were over 25,000 was there any security. So it was really a line of credit.
Yes.
And so now that they're no longer doing that, how would that impact? If another round of PPP came out or something like that. I guess Wells Fargo said we're not in the business of doing that anymore.
That's what it sounds like.
So that's kind of interesting. Well, listen, let me do this. Let me introduce our guest, and we're going to bring her on, and we're going to talk about mortgages. All right, we're going to talk about some mortgages. Now, here's the thing, Michelle, that most people, I'm going to ask you this. I'm going to ask people who are watching, what is the biggest expense item in your lifetime? I'm just interested to know. I would love for in the chat box to put there what the biggest expense of your lifetime. What do you think it is? Somebody just be brave enough to put something in the chat for me. What do you think the biggest expense? Now, I can tell you, if it's not the biggest expense, it must be one of the biggest, and that's your mortgage, your home that you buy. It's one of the biggest ones. The actual answer to the question that no one wanted to put because maybe they didn't want to type the word, it's actually taxes, right? Taxes is the largest line item that you'll pay in your entire lifetime when you talk about property tax, sales tax, income tax. They tax your taxes, and all that kind of stuff. But your home and your mortgage is one of the biggest cash items, cash flow expenses that we'll have. So I think it's very important as we unpack and talk about, Dr. Vanita said student loans. Oh, Lord. Is we unpack mortgages and what's going on, because we believe in the four pillars of intergenerational wealth, which is proper management for your current assets, proper insurance and investments, real estate, and business development. And so all of our shows, we try to, in some way, have it touch one of those four areas. And tonight we have Miss Tamika Burris, who's going to be with us. Let me tell you about it. She has more than 16 years of mortgage lending experience. She's originally from North Carolina, but currently resides here in Charlotte. Check it out. She's assisted more than 1,000 families in both the mortgage and refinance area. She attended North Carolina A&T, so she is an Aggie. Any Aggies out there, put Aggie Pride in the chat. She's mother of one, caring for elderly parents as well. So that's part of what we were talking about, that sandwich generation. And so without any further ado, let's bring on Miss Tanika Burris.
Hello, how are you all?
How you doing?
I am well. Thank you for having me here. I'm so grateful and honored.
I am so pleased to have you. I don't know if you remember where we met.
I do.
You do?
I do, yes. You were actually a vendor. Now, I may not get, I think it's the Young Black Leaders of America.
Young Black, okay, the YBLA.
Yes. And I had just drove back into town to visit one of my realtor partners, and you were set up about 2 booths down from them. And I walked over and I introduced myself, and you said, "You're with company name unknown. I want to work with you." I said, "Okay." So
that's been a few years ago, and then I think actually your realtor you're working at, there was a workshop that you were doing, and we both were invited to be a part of that. And so ever since then, we've been sending referrals to one another, and it's been a great relationship. So
absolutely. And I changed the cycle and I said, "Tony, I want to work with you." So then I reached out to you for your services.
and it all works. So it's been awesome. Well, I've always been impressed with your knowledge in the lending area. And I like people who are experts at what they do, because I know how to stay in my lane. And then I get people who are experts in their lane. But one of the things that really sparked me when I was reading your bio here is you were talking about your son, Rontel. Am I saying that right?
That's correct, yes.
Okay. And also your parents. And so you're kind of in that sandwich generation that Michelle and I were talking about.
Yeah.
Okay, breathe.
I need to attend her work-life balance.
Yes, sign up, girl.
If I can find the time.
That's awesome. But well, kudos to you, because that's a big undertaking. And actually, one of the ladies that I've talked about, and we booked her to be on the show on August 12th. Her name is Pat Bailey, and she has a wonderful organization called She Ages Well. And what she does is coaches those of us who are in the sandwich generation how to care for your elderly parents, how to help them age well. It's going to be a great show.
Yeah.
So I invite both of you to come back and be a part of that as well. So, so tell us a little bit about Tanika. Give us some of your background. I know that Aggie Pride is up in there.
Aggie Pride.
Yeah, all right. I got you. So tell us a little about you personally and who you are, how you got to what you're doing now, and then we'll start to unpack the mortgage business.
Okay. So, of course, I like to start out with somewhat of a very sad story, just to inspire individuals that think they may be trapped in life and, maybe have no other choice, that there's no other option to exceed in life. So I just want to really share my journey and my story very, very briefly. I tell people all of the time, I come from a single family household. My parents were married. They separated when I was 4, divorced when I was 17. My mother has almost no education. She can't read nor write. So I never had anyone to really help me with my schoolwork, but yet I was able to excel. My father was on street drugs for more than 30 years, crack cocaine to be exact. So according to the statistics that America has placed out into society, I never should have ever in my lifetime seen a 6-figure income. So one thing I can always say is that my mother always inspired and told me, you can do anything you wish to do as long as you focus and put your mind to it. So, going through the situation of being a single mother myself, raising him, not having to be on the system because I was not raised on the system. I walked to work, I caught city buses, but I still maintained. I went to school full time, I worked full time, and I had a part-time job. So I'm here to tell anybody, as long as you put the hard work in, the rewards will come out. So that's where my journey started, because I didn't see myself being content with $10 an hour. Once I got to $10 an hour, I was happy, I was excited. But $10 an hour, $15 an hour, that was not sufficient for me. I had bigger dreams and bigger goals, so I continued to work to pursue those. And I don't put any of that off to luck. That was all hard work. So, I say all of that to say, I guess they say on a limb, I decided one day to reply to an employment advertisement on careerbuilder.com. I don't even know if that's still around. And the individual, once I got to the interview, they asked me about my sales background. Of course, I started in sales in 1993. At this point, I don't even keep up with how many years that is. And so he said, well, you know what? That sounds a lot like what we do here, except for we do mortgages. And about 2 days later, they called me back and told me I had the job. That was July 5th, 2005. So I just celebrated 16 years. I was so ecstatic. I was happy. I said, Mama, I got the job. I got the job. I'm going to make $10 an hour plus commission. So at that job, I made my very first paycheck with a consistent comma. That was $2,000 per month. Then it went to $5,000 per month, to the point that my very last paycheck with them was $18,000. And I said, I found my job. I found my career passion. This is it. There's nothing else I want to do. So that was it for me. And I just continued to pursue and elevate in that, of course, until we came across the housing crisis. So during the housing crisis we had in 2007, 2008, I stepped out a little bit and I ventured into a few other things. One of the things I did is I was also a certified financial advisor with Merrill Lynch right before Bank of America acquired them. I've been a property and casualty insurance agent. Not to mention I've worked with Dun & Bradstreet. And if anyone is familiar or want to familiarize themselves with business credit, D&B, Dun & Bradstreet is the #1 place to go to build your business credit. I was there for a few years. I decided this is not for me. As you all mentioned, there's nothing more miserable than having to wake up Monday morning and go to a job that you do not like. It literally had gotten to the point for me that I would pull up to the parking lot and become nauseous. I could not tolerate it anymore. So fortunately, I was placed in a situation where I was able to sever my ties without any harm to my record with Dun & Bradstreet. And I sat on my behind for a year. So I can sit around. I've done a lot of work. I've earned this. And I had poor money management. Tony, you should have been in my life then. I had absolutely poor money management. And my son and I, we traveled. At 14 years old, he was able to see parts of the world some adults hadn't seen. So we traveled, and then one day I woke up and I said, okay, I need a job. So I started looking for a job right around in the Triad area and couldn't find anything that paid a minimum of $50,000 a year. And I refused to accept anything less than $50,000 a year. So I said, I'm pack up my bags and I'm going to Charlotte. I had to borrow $850 from my mom to move to Charlotte. And I came to Charlotte with an air mattress, a cell phone for my television, and a few plates and utensils for her. And after that, I started at a little job making $45,000 a year. I said, I'm going to step back into my mortgages because that's where my passion is. That's where my love is. That's what I know like the back of my hand. Came back into my mortgages. And I am thankful to say that last year was one of my best years where I averaged on average, my commission, and I am 100% commission, averaged anywhere between $20,000 to $25,000 monthly. So I'm here to tell anybody, it's not where you start, but it's where you finish. And I'm not done yet. I have multiple businesses, and I'm continuing to grow my business portfolio. And with Tony's help, I'm going to help diversify my investment portfolio as well. So that's just a little bit about me. I'm excited, and I'm ready to talk about mortgages and answer any questions you all may have.
Well, that's awesome. I had
Awesome
no idea
story.
of all that. So that's what I love about having people come on this show is that I get to find I get the tea, right? I get the tea that I didn't know before. And so I love it. So thank you for being so transparent and sharing because and you're right. Somebody out there may have heard this or they may be watching the replay and they're going to be encouraged by what they just heard. Yeah. And so kudos to you and congratulations on making it through all of those things that you've been through to get you to where you are today. So well, let's talk about some mortgages, right? Absolutely. So here's the scenario. So you can lean in on here. Here's the scenario that I see, right?
Okay.
I'm seeing houses go on the market and boom, they're gone, right? Yep. So before you know it, the house is off the market. I have clients that have put houses on the market, and within a couple days, they have all these offers on the table. Oftentimes, more than the asking price.
Absolutely.
And
Black Friday out there.
Right.
Yeah, and so I'm thinking back to 2007 and 8, and I'm saying, okay, are we walking down that same road again? Or so tell us what's going on.
Yeah.
Okay, we're not going to see, in my personal and professional opinion, I don't think we're going to see another 2007, 2008. There's too many government regulations in place now that will prevent that from happening. I do think that something has to be done about the inventory. Home buyers are reaching out to Congress left and right, according to Housing Wire, asking them to do something about inventory because a lot of these builders out here, which are the go-to places now for new construction, I think they're price gouging individuals. You can go to a builder site today and it's one price, and in 3 weeks it's probably up by another $10,000 just for not even a half an acre, like not even a quarter of an acre of land. But people are so eager to become homeowners now because the interest rates are so low. They are really putting themselves at a risk of, hey, will my home really be worth what I've paid for 3, 4, 5 years down the line? We don't know because we are in unprecedented times. I've talked to individuals that have been in this industry 25, 30 years. They've never seen an industry like this before. So we have no idea how long this will last. The flip side to that is it's also causing rents to go up. So you have people that are paying more money to buy these houses, even at a cash offer, and cash offers are getting declined right now. This is becoming their investment property. So the same home in 2021, the same home in 2018 that may have been $1,100, $1,200 to rent is now running you $1,700, $1,800 to rent.
Wow. So that take my breath away on that. Right. I'm like, man, it's so with the inventory being so low, and a lot of people are turning towards new construction.
Yes.
So what I'm hearing is part of the reason why, or what's happening in new construction too, is the availability of lumber and those type of things that, or the cost of the lumber is driving up even the prices on the new construction.
Absolutely. It's a domino effect.
So how, and I think about when you buy a house, there's a loan to value, right?
Absolutely.
And so with prices on existing homes coming in over the asking price, and we understand this, sellers know that. I'm gonna ask top dollar for my property, and if you want an inspection, then I'll go to the next bidder or whatever,
Right.
So the prices of the homes are going up. How are the banks or the mortgage companies dealing with these increased offers and that type of thing? And I know with cash buyers, it's just cash, but what about the average person that doesn't have cash to pay for a home? and they need a FHA loan, or they need a different type of, how is that impacting their ability to buy?
Well, I'm glad you mentioned that, because there are a lot of buyers, and don't let me forget to piggyback onto this. There are a lot of buyers out there that are first-time home buyers, and they rely on the FHA loan because it's easier to qualify for. And then when we look at conventional loans, Fannie Mae and Freddie Mac, they've tightened their lending guidelines, so it has made it more difficult for people to qualify for a conventional loan without putting the 20% down. So therefore, you know, sellers are looking, hey, I want that conventional offer first, because it doesn't require me to make any repairs to my property. It is being sold as is, where of course FHA, VA, USDA, those are government-backed loans, and they require a sense of repairs if needed to the property. So there's a few more codes that are required. But to address your question, how are people handling that? How are lenders handling that? At the end of the day, we're only going to lend on the value of the home. So if the home is priced at $300,000, that's what it's selling for, and you decide to place an offer for $330,000 and happen to win. Now, I'm not a real estate agent, but I do know real estate agents have what is called an appraisal addendum now that they are adding on to these offer to purchase contracts. So I'll tell people to just speak with your realtor in regards to that in more detail, because I'm not licensed to talk about that. But even with that being said, you're placing yourself at a gamble where, hey, if I am telling you I'm going to pay you $30,000 more for this property, my fingers are literally crossed hoping that it appraises for $30,000. Otherwise, I owe you an additional $30,000 on top of the down payment that the lender is requiring. Right. You're finding people having to back out of their loans. You're finding people having to lose their due diligence, maybe even their earnest money. You're having people out here that's giving $10, $15, even $20,000 in due diligence to purchase a home, and they're basing it all on a gamble of someone's estimated opinion of the value of the home that they're purchasing. That's all an appraiser does. They don't determine value. Mm-hmm. What they do is an estimation of value. So you're hoping that that person goes in and say that this home is worth $330,000. Now, keep in mind, in our side of the fence, those that are minorities, we are facing certain types of discrimination with appraisers when they go in and see homes that may have signs of Blackness. They may very well come out with a lower value. So it's not really favorable right now for the first-time home buyer. It's very discouraging for them. But what I always tell my first-time home buyers is delayed does not mean denied.
Right.
Right. Yeah. And so maybe you got to wait for this market to turn a little bit and find, the right property or what have you. So that's all really interesting. And you brought it up before when you were talking about the appraisal, and these appraisals coming back different depending, like you said, on if it's a black or brown house or black folks. And we've seen those stories on the news where our homes are being unappraised. I don't know if you guys saw it when it was a story not long ago where this lady kept getting these low appraisals. She was a seller. She kept getting these low appraisals, and it may have been a refi. And then she took down all her pictures of her family, all her black art and all this stuff. And she had her neighbor pose as her brother, and he was a white guy. He posed as her brother. And when the appraisal came, and she said that she was out of town, and her appraisal came out $70,000 higher than it was when she had her black art up.
Yes, and I saw that was in Texas.
That wasn't in Texas. I remember reading that, and I was like, wow, that's pretty. That's like redlining without the red line, right? But it's the same impact, same impact. And so interesting. So how does, and I'm dating myself here, right? Because there's a couple of things that I want you to talk about that I think are interesting, that I think is kind of unique to North Carolina. But the first one's not. What about the comparables? I mean, because I'm hearing about the comparables. How does that play in this?
So let me put my disclaimer out there. I'm not a licensed appraisal, but I am versed enough to explain how that works. So the appraiser has to utilize a minimum of 3 comparables, and in our industry we call it comps, within preferably a 1-mile radius of the subject property home. So what the appraiser does is they never literally change the price on the contract of the home, but what they do is they take and add and subtract on the homes that they're looking at. So for instance, if the subject property home has a 2-car garage and one of the comps have 1 car, then they're going to subtract off of that comp. If the subject property home has a deck and comp 2 does not, they're going to deduct off of that. If the subject property home has only a shower, but the 3rd comp may have a deluxe bath with a shower and jet tub separate, then they add value to that 3rd comp as well. It's never a problem to what they call rebut. So you can rebut the appraisal if you're not happy with it. I've seen very few people win against the appraiser's opinion of value. If you're very strong-hearted about it and your loan is conventional and not a government loan, then you can always ask your lender to get another appraisal done. Keep in mind, you're going to pay for that as well. So it's a gamble where you're crossing your fingers again and hoping that it will come out more. There's also the option that if you're just not happy, just go to another lender, and hopefully, if they will be able to come back with a different appraised value. Now, you can't do that with FHA because the appraisal follows the property for 120 days. So you're kind of stuck there when you start talking about the comps, because that appraiser is supposed to look at the most recent homes that have sold within the proximity of that home. And some people say, well, there's a house right next door that looks identical to my house that's up for sale now. Why did he or she not use that? Well, they can't use a house that is pending sale because it hasn't closed out. So they can only use homes that have been sold, typically within the past 6 months is the preference, but they'll go back as far as a year. If you're in more rural areas, they'll go out to as far as 3 miles outside of your area. The more unique your home is, for instance, log cabins or any type of unique custom designs, it makes it a little bit more difficult for them to find something that gives it a comparable value. So it's kind of tricky out there, but what people need to understand about appraisals is if you are curious, if you're a seller and you want to, put your house up for sale, you can either get a broker's price opinion you can get a BPO or a CMA, okay, a client's market analysis as well. So you have options to get that from your broker, or you can just pay for an appraisal yourself and get a general idea of what it will sell for. Aside from that, I would tell people to keep in mind that on the lending side, we don't choose the appraisers. Due to Dodd-Frank laws that came into play after the housing crisis, appraisers are chosen by a third-party appraisal management company. And the lender has to reach out to that third-party appraisal management company. And that appraisal management company may have a panel of appraisers that they utilize, and they typically just go whoever's next in line. Will you take this deal? Will you take this deal? And they go line by line until they find someone that says, okay, I will go out and I will do it. And then some appraisers, they're like, no, I don't want to do it for $525, or I'll do it for $800. So they'll come back and say, will your person pay $800 for it? And if it's outside of the norm, $800, $900, I've heard other LOs in my industry say that some people have paid $2,100 for an appraisal. That's when I have to ask my client, are you willing to pay X amount of dollars for your appraisal? Because this is what the standard is here, but this is what this appraiser is willing to do the job for. These appraisers, they have the better advantage now. We were once at a time where appraisals came back in about 3 to 5 business days. Now we're looking at some appraisals taking 3 to 4 weeks. I've had some of my colleagues say their appraisals are coming back 6 weeks later.
Wow.
So, it's kind of,
It's a real domino effect.
Yeah.
That's happening. Yeah. One of the things, the other thing I want to talk about, and then we can get into some more loan specifics, but you mentioned Earnest Money, and you mentioned, what was the other one? Due diligence.
Mm-hmm.
Explain the difference between those two.
Okay, so you're asking me realtor questions, but I don't mind. I don't mind. Earnest money is the money that you pay for your liquidated damages in the event that you breach contract per se, or you fail to go through with the contract. That money is given to the seller. Now, should you decide that for some reason you're not going to pursue the loan before your due diligence period is up, you are potentially able to get your earnest money back. If you notice in this particular market right now, most people are not really concerned about earnest money. They're concerned about due diligence.
Right.
So due diligence is the money that you give the seller in good faith to say, hey, I want to purchase your home, take it off of the market for me for this X amount of time. And it's giving you time to get your finances in order, to do everything you need to do to get the appraisal ordered, hopefully before your due diligence period is up, to inspect the property, to negotiate repairs. Is giving you that time frame and that due diligence. Now, keep in mind, in the state of North Carolina, due diligence is not required. It is 100% negotiable. But in the climate that we're in right now, if I were to walk up to you and say, Tony, I will buy your house from you, but I'm not giving you any due diligence, and Michelle says, Tony, I will buy your house from you, but I'm giving you $5,000 in due diligence, you will not even entertain my offer.
Right. Well, let's shift the focus back to some mortgage stuff then, because we had you all up in the real estate. Someone put in there in the chat earlier when we were talking about some of the finances and stuff, someone mentioned this thing called student loans.
Woo.
Yes.
All right. So talk to us about how student loans impacts one's ability to get a mortgage. Because I talked to a lot of people and it's like, oh, I got X amount of student loans, but they're in deferment. And oftentimes I tell them, yeah, okay, they're in deferment, but if you're looking for a home, that's going to have an impact. So talk to us a little bit about student loans and the impact it has on getting a mortgage.
Student loans are of the devil. Okay. That's it. That's the end of the story. So, I honestly believe student loans replace savings bonds. That is my story, and I'm sticking with it. Okay, the government has to find some type of way to make money, and I think student loans is just their way outside of taxes. So the situation with student loans, we have great news surrounding it. So just a few weeks ago, the Federal Housing Finance Agency realized that student loans was increasing the gap of home ownership amongst minorities. Mm-hmm. So they revisited that and they made it a little bit easier. Now, this just happened a few weeks ago. And I was like, wow, I just had people close that, could have benefited so much more had they did this maybe a week or two prior to. So if you recall, I don't know who has owned a home before, but if you recall 10, 15 years ago, you could purchase a home and your student loans didn't matter at all. They were not a concern whatsoever. But what was happening is that you had individuals that would purchase a house, they'd be obligated to these student loans, and to not pay their student loans, they would file hardship. They would say, I can't make my student loan payment because I have to pay my mortgage. And so therefore they were excused. So that's where you are finding the loopholes in the system. So the government said, okay, we're going to stop that. In order to make sure that we gain our money, we're going to say that your payments for your student loan must be calculated as part of your liabilities and considered when getting a mortgage. Well, that caused a lot of people that have gone out and made, $50, $80, $100,000 worth of student loans only to be making, and believe it or not, I had one lady, and bless her heart, she came to me making $1,800 a month with a master's degree and over $100,000 in student loans. She had less than a 550 credit score. I told her, I'm not going to put you in a home. I don't care if we do get your mortgage score up. I'm not doing it. You have to get paid what you are worth.
Yes.
4 years later, she has a job making $7,000 a month.
Wow.
And she entered a program that forgave her student loans. And she is an Aggie. So that just goes to show she has a 700 plus credit score. So that just goes to show that there's a lot of people out here now that are not managing their money properly. I think a lot of people are just getting these student loans for the thought process that it is free money. And then they're not negotiating their worth with these employers because you're getting paid pennies. If you're going to get $100,000 worth of student loans, you need to have $100,000 annual income. Okay,
Amen.
or
Amen.
50% of that. Okay, so negotiate your income. And if you can't negotiate your income, then speak with Michelle about becoming an entrepreneur and get money.
Right. That's what I was thinking. When she said she made $1,800, I was like, she could get her insurance license or something.
Absolutely.
Something. Yeah, absolutely.
Yeah, so right now, where we are with student loans is that the Federal Housing Finance Agency has said, if your credit report shows a zero amount, we can use that amount provided your letter from your student loan servicer also matches zero. Now, if it does not show zero and it has a price, a payment there, we will use that payment. However, if your student loan servicer has a payment that is less than that, provide that to us and we will accept it. May it be income driven, graduated payment, or standard repayment. So that helped a lot of people that were on FHA type loans. Now it's also saying that instead of calculating 1% of the amount showing on credit, it's now mimicking Freddie Mac and only calculating 0.5% of the balance on credit. So for someone that had $90,000 of student loans, instead of me calculating a $900 per month monthly payment for student loans, I can calculate $450.
Yeah.
You provide me with the letter that says it's $300, then I will provide that as well. So that's the new change. It has helped some with obtaining the home that they were looking at because it has decreased their debt to income ratio below the guidelines. So they're now able to qualify for it. Oh, how I wish that would have been around, months ago, because I see people with great credit scores. They have decent income, but then they have all of these liabilities,
Right.
Yeah.
So what is down payment like now on a FHA versus conventional loan? Have there been any much changes in that area?
None at all. So FHA still provides a minimum down payment of 3.5%. There are loan limits based on the county you're in. So I think, don't quote me on this, I want to say the maximum purchase price for Mecklenburg County is going to put you right around $369,000 if you want to put a minimum of 3.5% down. But you saw the home of your dreams and it's $600,000 and you want to go FHA because your credit score is a 630 and you recently had a bankruptcy 6 years ago, you're going to have to pay the difference. So the difference between the 355, I want to say it's 355, 356, 355, 356,000 to that 600,000. So that's going to change the difference with that down payment. Situations like that, I tell anybody, if you have $100,000, $200,000 to put down on a home and your credit is challenged, let's fix the credit and go conventional.
Yeah, absolutely. So new construction.
Yes.
How does new construction mortgages, new construction loans work? Because I'm hearing a lot of people going for new construction because of the inventory being low, and just the competitiveness of getting homes that are already built. So tell us a little bit about new construction.
I'm going to answer that question without being biased. I don't like new construction. Okay, so I think new construction is great for someone that is ready to take advantage of the low interest rates now. It's a great opportunity for someone that wants to become a homeowner. I always believe in home ownership. You can't go wrong with that. Whether you take the equity out now or 5, 10, 15 years later, just know how to manage it. So for someone that has to have a home now, they may be discouraged because on the resale market, they're constantly being outbid, and they just don't have that extra money to put $5, $10, $15, $20,000 more over the asking price. I think new construction is a great option for them. So, Tony, you put me in a hard place with the new construction. So just
Is the process still the same?
The process is the same, pretty much. Again, what you're going to do is you're going to go to the new construction site. They're going to tell you about their lots that will be coming open. Some new construction sites now, and keep in mind, with this economy changing with the way it is with inventory, there's a lot of builders popping up. So you have a lot of people that were once general contractors, they're making money and getting rich off of building homes and selling them. So you have a lot of different builders out there, and you really probably don't have enough reviews on the internet to kind of get a general idea of how good their homes are, how quality their homes are. Right. So I think with the impatience and the eagerness to purchase a home, people are not really doing their research on some of these places or the process at all. But the process is the same. You're going to want to get pre-qualified, pre-approved, which are two different processes there. And you're going to go to the builder with or without your realtor. I tell everybody to take a realtor with you, because if you're not familiar with the process and you don't have strong negotiation skills and sales, then you may not get the best deal when you walk out. But go on site and they're going to tell you about the various lots and what the lot premiums are. Some new construction builders will give you a house with all the bells and the whistles. There's no additional prices. Some new constructions will sell you a basic plan, and then it costs more money for the bells and the whistles. And then you undergo contract. So the story with new construction right now is that at one point in time, it would take some people 3 to 4 months to build. The longest I've ever known on general cases was maybe 8 months to build. I have clients that went under contract August of last year, just now closing. I have people that went under contract September of last year that they're not closing until September of this year. Hopefully, we hadn't got that far yet. So it's taking them longer. Make sure you read your contract thoroughly, because there is a clause in there that will tell you that this builder may have up to 2 years to complete your home. So read that contract well. Yes. There's also a clause in there that now that some of these builders have for their home buyers is that if the cost of building the home should change from the time that they've undergone contract, they have an option to pay more for the home or walk out of the contract and get their money back. I've seen people that have gone under contract in October, and then in February, the same house that they were looking at was $55,000 more. So from the same builder. So, those are things you have to keep in mind. We're facing the lumber shortages, the supply shortages, because people don't want to work. People are, hey, I'm getting unemployment benefits or whatever it is that's keep earning
$300 a week.
Money. I heard you talk about the PPP money. I just got $20,000 in PPP money. I make $24,000 a year. I'm not going to work.
Right.
So, we're really facing a shortage there when you ride by Bojangles and they have a $400 sign-on bonus. So, we're facing those shortages where people don't want to work now. And because they don't want to work or they found loopholes in the system, it's really hurting our economy, where now it's causing things like lumber supply to be high, even aluminum. The price of that is being higher than normally. So the builder is passing that along to the consumer, which is the home buyer.
Yeah.
Wow. Two more real quick things. The first one is just touch on refinance, and then just tell our people, if they're looking to refi or they're looking to buy, how do they get in touch with Ms. Harris?
Okay, so let me say this. If you own a home right now and you don't want to sell, I get it. I get it, and I agree with you, because why would you sell your home to step into this market and be in a situation where you're looking to pay more or equal to the house that you already have? Refinance that home if you can and pull the equity out of it and jump into the opportunity of purchasing an investment property. even if it's $50,000. The way homes are appreciating right now, who knows, that $50,000 may have gained you $30,000 more next year. You're not going to get that from any retirement plan from any employer. So if you are looking to refinance your home now, especially if you purchased a home 3-4 years ago when interest rates were 5 and 6%, had jumped up to 4, 5, 6%, or even if you purchased your home in the 90s and you hadn't paid it off, where interest rates were in the double digits, you definitely want to look at the option of refinancing your home. You don't have to pull all of your equity out, but pull some of your equity out to at least diversify your investment portfolio, or purchase more investment property, or just purchase some land and sit on that land. You never go wrong with real estate. So if that's something that you're interested in, then definitely please give me a call. My name is Tanika Burris. I can be found on Facebook and Instagram under The Burris Team on Instagram. So that's The Burris Team. My best telephone number in the Charlotte area is 704-389-0229. Or as always, my 800 number, 1-800-842-7228. I'm pretty sure you may have seen my billboard circulating around Charlotte on the back of the buses. So I'm here to help anyone that I absolutely can. If I can't help you, then I promise you I will get someone that can.
Well, Tanika, I just know a lot of people that I've sent your way, you've been able to help. You're just very knowledgeable about all the programs. And really, man, we probably could have went another hour talking about some of the things, the hero next door and some of those things we did not get to touch on. So we'll have to have you back, talk about some of the special programs that are out there and how folks can take advantage of them. So we'll just make sure that we do that, come back in another month or so, and let's talk some more, let people know how they can get home ownership.
Absolutely. Whenever you need me, Tony, I'm here.
I appreciate it. Her contact information is in the chat, everybody. Miss Tanika Burris. Any last words from you, Michelle?
No, like diversify your portfolio. Like the tip that you just gave was pull the equity out of your home if you don't want to get into this market, and use it as an investment into an investment property. So especially if you've been in your home 10 or 15 years, because I don't want to sell because I don't want to buy in the top of the market again. So very good tips tonight. So thank you.
I thought it was awesome. It was awesome.
Mm-hmm.
Well, as always, everyone, thank you for tuning in to the Real Money Coach. We appreciate everyone. We appreciate all of you for coming. Again, special thank you to Tanika Burris. Special thank you to Michelle Mitchell Consulting. Remember earlier in the chat box, Michelle's information was in there for her workshop that's going to be, I believe, Wednesday, July 21st at noon. Please make sure you support her for that. And it's free. It's free. So y'all got to eat. So, take your lunch break. You're working from home. Ain't nobody even know you're on the Zoom, right? You're working from home still. So make sure you come and be a part of that. As always, man, it's been another great episode of The Real Money Coach. I appreciate you all. Until next week, stay safe. And if you haven't been vaccinated, wear your mask, keep your social distance. And even if you have, it ain't a bad idea. So that's it. I'm Real Money Coach. Thank you. Take care. God bless.